You know, the one thing that I think is going to lead to a lot of people making money in this next year, whether it be through stocks, real estate, or crypto, is the ability to see trends and then play them while they're happening. So I want to talk about something that we call market structure and how to use it to make money. Now, I was watching some other YouTube videos the other day, and somebody said, well, the market is in a downtrend, so it can only go up. Now, what he was referring to specifically was crypto. And the reason why I really kind of took offense to that statement is because in trading, there's no absolutes. There's no certainties. The market doesn't owe you anything. It doesn't matter if it's going up or down. You don't automatically make money. So let's take a look at this. This is the S&P 500. And if you look from left to right, what you will see is that there are higher highs and there are higher lows. That's an uptrend. What I would like you to do is to mentally draw a line connecting those highs. And what you get is this. Now, when price goes below that line, which it does right here, you now have a lower high. And what that signifies is that there has been a change in market structure. Yes, before that point, we were in an uptrend. After that point, we are in a sideways or a neutral trend. And then there's another uptrend after that. And so there's just constantly changing. And in my opinion, it's people who are able to pick up on these changes in market structure that allow them to make money, because what you find is that people will buy when it's going up, and they'll buy even more when it's going up. They'll sell when it starts coming down. And so that is where you can get an advantage over them, is by understanding this concept. So here you have a change in market structure, here you have another change in market structure, and here you have another change in market structure. But you will also notice that when there is a change in market structure, oftentimes there is a period of consolidation. In other words, the price comes back up to this area, bounces off, and then continues to move forward. But there's always a period of consolidation first. Now, the difference between this type of trend and a downtrend is the fact that in a downtrend, your highs are getting lower and your lows are getting lower. So here, this low is lower than this low, and this high is lower than this high. If that happens, then you're in a confirmed downtrend, and you should be selling. The one thing that I think is going to lead to a lot of people making money in this next year, whether it be through stocks, real estate, or crypto, is the ability to see trends and then play them while they're happening. So you have to understand, first of all, what is the overall market structure? Is the market trending up, trending down, or is it in a neutral range? And then you have to decide how you're going to play it. If you are a momentum trader and you want to ride the trend until it's over, then you probably want to stay away from this area, wait for a confirmed downtrend, and then buy. But if you're like me, and you're not trying to predict tops and bottoms, but you're just trying to take advantage of this up and down movement, then this is where you want to be buying. Now, the way that you determine where you're going to enter and exit a trade is very simple. You just take the swing low and the swing high, and then you come up with an average. So this swing low, this swing high, you average them together, and you get a middle line. Then you take the most recent swing low and the most recent swing high, and you average that together, and you get another line. This is called fib levels. And it's just simply taking the difference between the swing high and the swing low, and then dividing it into sections. In this case, it's divided into 5 sections. So 1, 2, 3, 4, 5. And so if you are a simple trader, which I recommend everybody start out that way, then this is how you would enter a trade. Enter on the pullback, set your stop loss right below that line, and then determine how much you're willing to risk, and then set your take profit at an appropriate level. Now, if you want to get fancy, you can then use these lines to determine where you're going to set your stop loss and where you're going to set your take profit. So this line would be your first target, this line would be your second target, this would be your third target, fourth target, and fifth target. And then, once you hit that, you can reevaluate and decide what you want to do. But the most important thing is that you understand the market is constantly changing. And if you're a buy and hold investor, congratulations, you won. Just kidding. But if you're a buy and hold investor, you have to realize that you're missing out on a lot of gains because the market isn't always going straight up. And if you're buying at the top and then not doing anything, well then, guess what? You're losing money. So here's a great example. This is Tesla stock. Now, if you would have bought at the top, you would be down 94%. If you bought near the current price, you would be down 65%. But if you bought in between these 2 points, you would be up 86%. This is why you want to be nimble. This is why you want to be able to take advantage of these different market structures. And so when you see a change in market structure, you want to be paying attention because that is where money is made. I mean, just take a look at this. We have a change in market structure, get in the trade, set your stop loss appropriately, take your profits appropriately, and then repeat the process. And you could have done this over and over and over again. And if you just simply do this, it doesn't matter what you invest in. Whether it be stocks, crypto, whatever it may be, you are going to be making money. And the key is to understand market structure, understand the overall trend, be able to see when there is a change in market structure, and then take action accordingly. Now, one of the things that I want to talk about real quick is this idea of smart money versus dumb money. Because I think sometimes when we're looking at the market, we're trying to figure out what's going on. We're trying to figure out what's causing the market to do what it's doing. But the truth of the matter is that you don't need to know that. The truth of the matter is that you shouldn't try to figure that out. Instead, you should just be looking at the charts, looking at the patterns, looking at the market structure, and then trading based on the evidence. In fact, the smartest money in the world is dumb money, okay? Because dumb money just simply goes in and buys stuff and holds on to it forever and never checks on it. And so they're just basically hoping that whatever they're invested in goes up. But the problem is, they don't have any rhyme or reason. It's not a strategy, it's just dumb luck. Now, the other type of investor is what we call the smart investor. And what they do is they come in, they look at the evidence, they look at the chart, they look at the market structure, they look at the valuation. They look at all of these different things, and then they make a decision based on the facts and the data. And so that is how you become a smart money investor, is by looking at the evidence, understanding the patterns, understanding the market structure, and then making your decisions based on that. There are two types of people who lose money in the market. One is the person who doesn't do any research. They just throw their money at a stock and hope it goes up, and then they watch it crash and burn. And the other type of person is the person who sees the evidence. They understand the pattern, but they just simply ignore it. They choose to ignore the facts, they choose to ignore the data, and they do something else. And that is why they lose money. So I challenge you to take everything that I just said, put it to work for you, whether it be in the stock market, the crypto market, or the real estate market, and I promise you, you are going to see results. Hey, I appreciate you guys stopping by. Make sure you subscribe, hit that like button. Also, if you want to learn more about investing, I just released a free course. It's on our website. It's called Investing 101. It's basically everything I know in one simple package. There's no hidden agenda. There's no sales pitch. It's just my heart and soul put into that course. So I challenge you to check it out. Start today and see where you are in 30 days, 60 days, 90 days, and a year from now. I promise you, you're going to be a better investor because of it. Take care.